Hello everyone, we're going to go ahead and get started. We're really excited to welcome you into our webinar room. We have a terrific presenter today. I'm just going to take a moment to introduce to you to Anne-Marie. And I'm actually really looking forward to this event myself because this is an indicator that I use a lot myself, and I think you'll be very excited here and take a lot with this. Let me give you a little background, on our presenter today. Anne-Marie Byand, and Anne-Marie, I apologize. Hopefully, I'm getting your last name correctly there. She has some. It's Band? Okay, thank you. I appreciate that. Sorry. Anne-Marie's got a lot of interesting background, and she's really been, I think, where most traders have been. She's been through a lot of the things that you and I have been through as a trader, and she has a lot of experience helping people become more disciplined in their approach, really setting some rules down, and giving you some really fantastic education. So we're excited to have her here explaining to you some of her favorite systems. I'll just turn the time right over to you, Anne-Marie.
All right, thank you so much, Dave, and welcome everybody to the webinar tonight. It's exciting to know that Dave actually uses this indicator. It'll be interesting to see if we have some similarities on the approach, because I think that my approach is a little bit different than normal. So before I start jumping into this, and what we're going to do is go over the mechanical things that we're going to look for, and then talk about a few of the nuances, and then we're just going to jump right into the charts so that we can see this at work and try to understand how the technical indicator works on its own. The one thing that I do want to tell you is that I have the daunting task of working with traders live every single day. And it's daunting a little bit because not only is it about technical indicators, it is about using a mechanical process that allows you to tell a story through the charts, as well as using the technical indicators. And in order to be good as a trader, you are going to have to work through that mechanical process of understanding what story the chart is actually telling you. And so as we slip back and forth and look at the different kinds of indicators and how we can use them, it's always going to be in the framework of what's the story here, right? So this is actually, this weird thing right here on the right-hand side is a stochastic representation. It's a 3D stochastic of a formula. And it allows you to see wave dimension and momentum, right? How it ripples out and keeps itself steady and then gets concentrated. So for the stochastic momentum index, the strengths for it are, one, it's extremely straightforward. If it's moving up, we know in general the chart is also moving up, and if it's moving down, the chart in general is also moving down, unless there is technical divergence, and we'll be talking about that. That frequency of rotation gives us an extremely high level of accuracy, meaning if usually it's up and I know I can be long, or inflecting and I know I can change position, 9 times out of 10 it will tell us the right thing to do. Now, that's a relative term, provided everything else is not muddy, right? Because we don't want to try to read the bottom of a cup of hot chocolate. You're not going to see the bottom there, and sometimes charts are muddy like that, right? Something else stochastic does is it detects change very quickly, and I'm going to show you in Metastock how smoothing, the concept of smoothing, alters the way your stochastic looks, and it gives you the choice of how you'd like to see this indicator pop up. It's a very nice event inside of Metastock that is extremely simple, and I'm going to show that to you. And it also gives us advance notice of change because of technical divergence in one way, and then also the inflection events that occur with the stochastics are usually extremely reliable. Now, the indicator is lagging, but it is the least lagging, and that's why it only has this one relative weakness. I look at a lot of technical indicators, and there are a lot of them that are just, they have a ton of weaknesses. Now, your goal as a trader is to get a chart that's as clean as possible, right? You just want it to be very, very clean, so your decisions become extremely straightforward. What a lot of us do as we learn to trade is we begin with charts and then add technical after technical after technical, and many of them duplicates of each other, giving us exactly the same information, and that's just not necessary. So your goal should be, how clean can I make my charts? All right, so let's take a look at the next slide. The goal for us finding the ideal space to trade the stochastic is to find a stochastic that has an image that is sloping upward or downward. If it's sloping upward, you know it's got momentum and acceleration associated with that. I use this concept very often. It's sort of like this. Let's say you're on the interstate and you are on cruise control and you've got it at 65, because we don't break the law in here. Of course not. None of us are lawbreakers. None of us are rule breakers, certainly. Well, you know that's not true. A lot of us are rule breakers, particularly in the trading world. And the bad thing is we break our trading rules all the time. And so we really want to stop ourselves from doing that. And so what we want to see is when we're driving down the road and we've got that cruise control set at 65, that 65, we are still moving. We are moving from point A to point B, but we are not accelerating the way we have to if someone is driving 45 in the lane on the right side and we have to move to the left and accelerate past them, right? That gives us the acceleration event. Well, a slope represents acceleration. So when we look at that and we see that slope, we know that acceleration means that momentum is behind us and we've got a number of people eager to be part of the trade. Okay? So it can be sloping through the neutral zones. Now I'm going to talk about the neutral zones. A lot of folks don't use this concept inside of the stochastic momentum index, but the neutral zone event is anywhere from 25 to negative 25. And what happens in there is very suspect, meaning if you are looking at lots of wave movements inside of that region between 25 and negative 25, a lot of that movement is false. So you can really take for a much higher space of reliability in the stochastic that is giving you an inflection. An inflection means a rolling over. That's a math term that actually means the slope is zero, because if something is moving up and it has to turn around and move down, it must have a slope of zero, and that's that turning over space that it has, right? Either concave or convex. So those spaces up above 40 or below negative 40 are ideal for us to take these positions. And those extreme levels, the 40 and the negative 40, are going to be the areas that we are going to get the best trades. Whoops. All right, so when we see the stochastic in the neutral zone, which is between that 25 and negative 25, it's sideways. Anytime it's sideways, we know that there's a high level of unreliability. So what do we take away from that? if we see a stochastic sitting between 25 and negative 25 and it has no slope, meaning it's flat or chopping around that area, it is not giving us an ideal space to take a trade. Now, there are a couple of exceptions there, and I'll show you those tonight as well, but overall, that is what I want you to think about, right? And our goal as a trader is to eliminate the spaces where trades are going to break down, right? That's it. Your goal, eliminate the spaces where trades are going to break down. Now, you're never going to be able to eliminate completely, but it is definitely important that that's your goal, because if you are in the space where you are looking for pearls and diamonds in a sea of rocks and mud, you're just going to have to learn to sift and filter, and many of us are not good at that at all. Let's talk a little bit about the stochastic nuances, right? These are the areas that people don't use normally, and really they're the most reliable things that you can think about using with the stochastic. So first thing, it identifies consistent momentum in the overbought and oversold levels. It's either consistently going down or consistently going up. It identifies accelerating momentum. That's when the slope is increasing upside or downside. As long as it's steep, whether it looks like a slide or a mountain, if it's steep, it means it's in acceleration, and that is a beautiful place to take a trade. By the same token, if the slide starts to flatten, or that mountain starts to flatten, we know that we have dampening momentum. That means not as many people are as excited about buying or selling at the particular price points that are coming across. And also the overbought and oversold levels, when they get into really extreme spaces, they really identify the potential for upcoming reversals. Here's another nuance that a lot of folks don't think about. The locations that the SMI sits in gives us an idea of what it is that it's most likely to do. For instance, if I am in a very trending zone, let's say my SMI is all the way up at 70, and it begins to roll over, many people begin to think, oh, this chart's rolling over, when indeed all it's doing is pulling back into support. If, again, I have a negative 70 down there, right, in my SMI, and it begins to inflect and roll upwards, most folks are thinking, oh, okay, well, this stock is lifting, and many times it's just popping up into resistance. So you've got to add a framework around what it is that you're doing while you're working with these technical indicators, right? The neutral zone, you can always say to yourself, you know what, that's suspect. I've got to look for something else that's confirming upside or downside momentum before I take this trade, because I'm looking at a space that is not necessarily reliable. The next thing, I have extreme trading zones. Those are the areas that are, you know, up at 90, 97. Here's the thing, if you see a price pattern that triggers along where you go, oh, look, it just broke out over resistance, and you've got a stochastic that measures 90, you probably ought not to take that trade unless you're only taking it for about 5 minutes. Because when these things start spiking up tremendously high, it is telling us that we are coming close to the end of a run. So the best places to buy longs will be when that stochastic is in that very steep downtrending space and flattening, and the very best place to buy shorts is when that is extremely peaked high, as long as everything else is moving in its favor. All right? That in turn gives us those high probability trading events, and that's what this is all about. All right, so what I would like to do now is just jump into Metastock, and Dave, would you help me again figure out how to Yes, there we go. Lovely. Yes, my short-term memory events are quite lacking. All right, so let's see, main display. Okay, let me see if I have the right preview. Beauty. Okay, so here we are inside of Metastock. Metastock is you know, tremendously clean. I really like how clean these charts start. But let's start with a daily chart because many of us are swing traders here. We're going to start with the daily, and let's start with a fast stochastic, and I'm going to show you a little bit about what Metastock does here. This is the volume action here, but we are looking at Tesla. Why? Because Tesla has certainly made us a tremendous amount of money, and it's been a very simple chart to trade. And what I'm doing is sort of showing you the difference between a technical indicator I find to be absolutely horrific, and that's the MACD. I'm sorry, I just don't like it. Here's something. If you are using a technical indicator that is a derivative of a first derivative of price, it means it's watered down, right? So the MACD is a derivative of moving averages and their convergences and divergences. You want a technical indicator that gives you as much information as you can possibly get out of it to use it. Now, if we take a look at the MACD here, and we compare it to the price action there, let's just expand this a little bit. We can see that certainly this is telling us to be long, right? Certainly. Now, as it dips here, we know it's still in a trending territory, but does it really give us a good idea of what's happening here as we look at a chart? To me, the answer is no. Why? Because the MACD doesn't tell me, hey, listen, you've got a ton of upside momentum still sitting there. As it dips over like this, right? You see the divergence here because price is moving to the upside and the MACD is moving to the downside. What am I supposed to interpret there, right? So it's not as clean to me as, say, the stochastic. Now, here's how we're looking at this, all right? This is 40. This is negative 40. This is the 20 area. Let's go ahead and copy and paste that. And then we can change those. Let's make that, no, I don't know, something generic. We can change it to that. And we're going to make this 25, maybe we get 20, somewhere between 20 and 25. It's going to give us oh, well, we definitely don't want that color. Can't even see it. All right. Okay, so that is going to be one area of a neutral zone. Very nicely. You know, I just started using Metastock and trying to understand it, and it's amazing how straightforward this application, these charting events are. It's really, really, really straightforward. Okay, so let's talk a little bit about what this fast stochastic momentum index is doing for us. Now, this is a 615 stochastic momentum index. Let's take a look at what smoothing does first, and then we're going to actually use it dependent on what our personality types are like, all right? If we are someone that makes snap judgments all the time, and we get into a space where we've got the itchy trigger finger and we click and then we go, oh my gosh, why did I do that? You want to make sure that you do not have a ton of jagged peaks in your formations. This one has some jagged peaks because I'm not the itchy trigger finger girl anymore. I used to be, but take a look at this. I'm going to decrease the smoothing period. I'm going to make that the 6, but I'm going to decrease the smoothing period from 6 to 2, and I'm going to leave the double smoothing period alone, and take a look at what happens. The smaller this number is, the more sensitive this technical indicator becomes. But the more sensitive the indicator becomes, the more difficult decision making. Folks, if you look down here, I tell you what, here's what we'll do. All right, you see that? When I use the smoothing event, and I have a smoothing period of 2, that, wow, I can see, but nobody else can see. What's going on there? No, I'm not talking about slow stochastics. I'm talking about a stochastic momentum index. All right. All right, okay, super. Everybody sees it fine. Let's go ahead. That smoothing period, I'm going to make this just a little sharper for us so we can see it a little bit thicker. That smoothing index makes this much more jagged. And so when we look at something like this, it's very difficult to make decisions. So instead, we give ourselves something a little smoother. If you want it even smoother, you can do something like that. And then that way, these jagged spaces don't push you into a region where you are having trouble making decisions. All right, don't worry about the box. I want you to look at the picture, okay? Now this is smoothed a little bit too much, so we're going to put it right there, all right? Now, here's what this chart is going to tell us. Now, let me see. I'm still a little new with this, so I'm trying to stretch it out. So let's take a look at this, okay? We're going to take a horizontal line, and we're going to put it on each peak and valley that we see. Oops. Let's do, that's a peak. And let's move this up just a little. Right? Okay, so now we see that. Here's another peak. We're going to use the peaks in the chart. There's a peak. There's a valley. Here's another one. We're just going to look at the charts for a minute. I just want you to see what it is that's going on here. And this is, of course, a daily. And now we've got this. Okay? So let's take a look at this region. So we've got these wave actions that move from high to low, back to high, back to low, back to high, back to low, back to high, and we are moving significant amounts, right? This is a very, this is a chart that moves quite a bit, so a shift down from this level, which gives us, you know, somewhere around 100. The slip down here is a $5-6 move, right? So we are looking at 6 and 7% moves all over the place, which is why Tesla is a little bit of a heartbreaker to trade with unless you are very good at what it is that you are working on. All right, so here's what this stochastic momentum index will do. See how it's flat here? And then it starts making a run, and that run is from somewhere around 35, and it runs all the way up to 40, right? That's a huge move, right? That is a very, very big move. Look at this right here. It inflects, it flattens out in the trending zone. I'm going to move that now, right? It flattens out in a trending zone underneath negative 40. That means a negative trending zone. As it flattens out there, it tells us, listen, my momentum dipping down is flattening, and so I am going to be moving. So what I need to do is look exactly where relative resistance is. That's how you use support and resistance combined with a stochastic. And you watch it break, and then you take the trade. If you take the trade down here, you are getting in front of the trade. Now that's okay to get in front of the trade if there are other things telling you that that's a good idea, but by and large, it's much better to let somebody else take the cushion so that you can step up into these spaces and take a profit. Remember, if a chart is moving downwards, right, if the SMI is moving downwards into this region and the slow one is moving in the same direction as the fast one, it usually means it's in a downward sloping trend. So when it shows the inflection event, what it's really telling you is, you know what, I'm just moving into resistance. So not only can you pick where you are starting the trade, but you know where the trade is going to end, because the SMI is essentially telling you, I'm going into resistance. Because see, I've got this negative event right here where both of these are sloping downward, and if my fast SMI begins sloping when my slow SMI has not, it means I am moving into a resistance level, and I'm going to fail it once I get there. And lo and behold, that's exactly what the chart does. Right? Now, many of us clutter up our charts with so much information that we don't stop to suck the marrow out of the one indicator that gives us so much information that we pretty much don't need much of anything else, right? It's nice to have a few moving averages. I use pivot points. I tried to put up the Tyrone levels, but I just wasn't very good at manipulating that. Again, I'm a little bit newer at Metastock, but I have found it to be a really fun platform to work with and extremely versatile in terms of charting mechanics. So if you have support and resistance levels or anything like that, that's what it is that you're supposed to take away from that. Notice again, do you see this all the way down here? This is in negative trending territory. It's outside of the neutral zone. Outside of that neutral zone. So you know it's in negative trending territory. That means that this is going to collapse, right? As long as it's down here trending and not above the zero line, which is this dashed event right here, and I think I probably ought to make that one a little bit thicker, right? That zero line says, hey, listen, either I'm negative trending or I'm positive trending, right? Now, this crosses over the zero line, but it stays in the neutral zone. Right? So the slow SMI is telling us, listen, your moves, this is actually the average SMI, and this is the SMI here. So this is an average pool. But in any case, it is the slower line of the two, and it gives us relative undulation and slope in the chart. All right? That's what we're going to look at. The slow line gives us the relative relationship that we need to have watching these two things together. So as it pops here and it pulls back, our thought is, well, wait a second, if this is now moving up and that is moving down, when they're moving in that opposite direction, I know it's coming back into support. So that fast SMI gives us the direction of the trade, and the slow SMI tells us likely where it is that it's going to stop. Right? Now, once it gets up over the zero and starts chopping around, we've got ourselves a decision point. Here, the SMI is not telling us too much of anything because it's sitting in the neutral zone. So the inflections, we can't sit down and go, okay, definitively, this is what the directional momentum looks like, right? But we can't see the fast SMI is still telling us the proper trade. Here's this inflection. Right? The inflection right there. There's relative resistance. We're breaking out, up. We know we're supposed to go to here. It doesn't get there until the next day, and then it gaps up. Which, folks, listen, if you're taking a trade into a gap up in the morning, take some profit because the gap has a tendency to fill at least 50%. You can always add back. All right, now the next thing to notice about the SMI, as it is changing direction, it's going to have the series of low, higher low, higher low, higher low, right? When momentum and acceleration are moving in this chart, it's going to see all of these things occur. So let's take a look at what happens here. We've popped up, we're coming into support. All of a sudden, we're holding support. Look at where the slow line is now, above the zero. If the slow line comes up above the zero and has slope, see it? That slope event, it tells us, listen, I've got upside action. So if I see this move right here, see this tiny little pullback, it's measured quite rapidly here in the SMI, but it also says, hey, listen, that's an inflection event. I'm going to watch it get up and out over resistance because it still is in the neutral zone, and I need to be sure, right? So now I have a new region to look at. That's going to give me that space where I can say, you know what, I'm going to break out and I'm going to go long, right? Now, everything's above zero, everything's sloping higher. If these things are moving, guess what it's not going to? It's not going to say, hey, listen, I'm going to stop a resistance. What it's saying is, I'm going to make some new highs. Both of them moving in the same direction, just like that, up above zero, outside of the neutral zone, I'm going to make new highs. So if I'm sitting like this and all of a sudden it flattens out, and then again, I'm going to borrow this because I don't want these things to get so entirely messy. I'm looking for new relative support as this flattens out. What this is telling me is any pullback I have, it's going to be into support. So when we look at something going into support like that, and let's move this along a little bit, we can see very nicely that we've got new areas that we can say, hey, listen, just as long as I'm holding support, I am not going to get out of my long. Many of us get extremely skittish once we start collecting profits in our trades, and indeed what we really need to be doing is sitting tight, taking a little profit, watching it come into support, and as it holds support and begins to bounce, we can take more on with the trade. All right, so spent a lot of time with that one. Oh my goodness, where am I? There we go. All right, so I am going to take a look at something that's very similar, but doesn't give us as much information. So let's take a look at the Williams percent R. All right, and we're going to expand that. Now, of course, you could see, well, this line is probably not something you can see, frankly. All right, now this Williams percent R, I mean, we know what this chart looks like, right? It's a beast. Tesla is a beast. So we can see that it's moving up, but it does tell us, hey, listen, if this rolls over, we've got ourselves a little bit of a pullback. But it's not giving us a flavor of it's pulling back into support. This is popping into resistance. I'm moving in a space that I know what framework I'm dancing in. This is just saying, hey, listen, this is generally an uptrend. It's strong. That's pulling back a little bit. I'm going to wait for the bounce action there, and then I'm going to move forward. Now, there are probably some people that can take this Williams number here and really turn it into something really pretty. And I can see very well that it does give us nice clean, oops, I don't mean to do that. It gives us nice clean rotations about when these things ought to roll over and then pop up again. But for me, it doesn't give me a framework of what it is that I am looking at, right? And this is Metastock version 12, I believe. Yeah, I think that's what this is. Somebody's saying, hey, listen, where is that? And so that works pretty nicely, but again, not something that gives me a strength that allows me to say definitively I know what's going on. Now, I can look at this chart easily and say, hey, listen, of course I am trending up. Now that I've got this lower high, I'm a little concerned about that. But again, here's another lower high here, based on the chart. So in essence, this Williams is giving me just sort of a line version of what it is that I'm seeing. I don't really want that. I don't want a line version of what I'm seeing. I want an interpretation from what it is that I am seeing. So let's take a look at this one. Relative strength index is, let's go ahead and make this one thicker also so folks can see it properly. This relative strength index compared to the stochastic, which is sitting just below it, right? Now this stochastic is a longer version. Take a look at the parameters on this one. This is 18 and 40, right? Now this one has a tremendous amount of smoothing. The smoothing period is essentially the same time period, and the double smoothing period is 1. Now if I move this down, again, to remind you, it gets a lot more jagged, and you can make better decisions if you so choose. Now the relative strength index, also very nice. It tells me, hey, listen, I've got relative weakness. I'm in the neutral zone right here because I'm sitting around 50. I've got relative strength because I'm sitting above 65, 70. But that's really just another picture of the line chart. Instead of having something like the stochastic that is not only telling you, hey, listen, I'm doing this, it's telling you how it's doing it. For instance, here we are in an upward trending space. As long as the slow line stays up above that 20 to 25 level, you know that it is in a general trending zone. So I don't even have to look at this chart, and as long as the fast SMI stays above 0 generally with it, I know I'm in a very solid uptrend, and any of my pullbacks should be into support. What this does is give me a framework of, okay, I know I'm trending upwards. If I'm sitting here and I see this right here, and then I say to myself, wait, how is it that I am supposed to make a decision here? I'm moving upside beautifully, and I'm holding this level. What is this actually telling me? It's telling me, because I'm here, that I'm coming into support. Now, it could be primary support right here, or it could be secondary support, you know, somewhere around right there, right? But it's still support. So I am going to be looking for those spaces to say, all right, I'm going to look for primary and secondary support. If it holds the region and it begins to inflect, I know that I'm in good shape to stay long, and as a matter of fact, just so long as I can hold these areas that I've come back to retest, I can stay long and expect to go higher, right? Now this works whether I'm looking at, let's see. This works whether I'm looking at something that is, where is that little, aha, here it is. I don't see, okay. I don't see it there. Whether I'm looking at something that's a daily or something that's a 10-minute. Let's scooch that over. You can't find it in these, not sure why. Whether I'm looking at a 10-minute chart just like this, or I'm looking at an hourly chart or a daily chart, the mechanical momentum is the absolute same. So what you need to do as a trader working with the stochastic momentum index is say to yourself, hey, listen, I'm going to watch this, and I'm going to watch it tell me where to buy and sell. I can almost close my eyes. Let's take this oscillator out because we are getting into a little bit of a time crunch, and I do want to stop and answer questions for you in just a couple of moments. So if we're taking a look at this, and let's move this volume down here. If I didn't have anything else telling me what is going on, and I just said, hey, listen, whenever this thing spikes and tells me to inflect, all right, this is a fast one, isn't it? I'm going to smooth that out a little. All right. All I'm going to do is, let's just look at these peaks and valleys and see how many times we're wrong, all right? Way high up, we're going to say buy, we're going to say sell for a pullback, and then low, like down here, we're going to say buy for a breakout. So we've got this. This is a high one, right, because it's way above the 40. And we've got this. This is the 615 we're looking at, and this time frame is hourly, so it doesn't give us too much noise. And that's not really negative, but it is underneath the 0, so we could take it. This area, and then actually we could take this area right here. So this one says I need to sell. So let's say as soon as it inflects, I sell. And then I'm going to wait until it bounces and tells me that I need to move in the right direction back to the upside. And that's exactly what it is that does. Right? It comes all the way down underneath the 0, totally recovers. Anytime the SMI comes under the 0 and totally recovers, when the slow line is sitting above it, you know it is moving upwards into the trending region. By the same token, the breakdown across that 0 and failure does the exact same thing. All right? So, for instance, like this, if it pops up here and then rejects the region, we know we're coming back into support. But this one says sell, this one says buy, this one says sell. Now, if we do sell this here, we're going to see we've got flat action right there, right? Now, there's a reason as you learn this technical indicator, when you see an inflection here moving in the negative region, and this is sloping up, you know that what this chart is doing is simply pulling back into support. So when you take the short off of this, your brain should be focused on, wait a second, if I'm taking this short, I know it's supposed to come back into support. Where is that? It's right here. Now, if I pull back and I don't get into there and I hold a brand new level, like it's doing right here, all of a sudden that's new support, and I know something is wrong with that short. So this is a bad signal. This is a signal that we have to use additional things to look at in order to make it go well. But here's another one: sell, buy, sell. Okay, so out of all of these indicators that we have one of them that's awry, and if we put it in the right framework, we have exactly what we need to make the right decision. All right, so that's, I had no idea it would take that long for us to get through all of those things. What I'd like to do is open it up to questions on the specifics of using this technical indicator and really how you can simplify your charts and make your trading decisions so much more straightforward, especially with something like Metastock that does that for us in such ease. Here's something beautiful that Metastock does. I like it. Does it super simple. Let me show you this. This chart has the ability, we have the ability to drag and drop right onto another formation. So we can be looking at a very slow sloping SMI and then a very fast one that gives us, see, now we only have one space that we are looking at, right? And if we are just using, we can delete that one and maybe even delete that one. And then all of a sudden we're looking at just two lines that are telling us all kinds of information, but it's really very, very functional, very, very fast. All right, so let's open that up to questions a little bit. And Dave, if you would help me filter any of these, if you have specific questions. All right. I do want to say, while Dave is looking at relative questions that might, sure, I'll give you my settings again. But for the folks that showed up here to Metastock, if you have not signed up for a free bronze membership at the Trading Book, I urge you to do so, because visiting here tonight, if you send me an email after you have registered that says, hey, listen, I attended the Metastock event, we will get you 2 weeks in the platinum level trading room. So that's the highest level of the trading events. Now, some of us are already members, some of us have already been here. But go ahead, if you would like to come in, just go ahead, send us an email. You can do 2 weeks free in the platinum, or you can get 15% off any membership level, or you can get a 15% discount off of the complete fast track level. And those are things that you can just say, hey, fast track is the training system that I run through every single thing that everyone needs to know to trade well and to build themselves from a developed perspective. And that fast track gives you 3 months in the live trading room. Really, it's essentially free, because it's even cheaper than if you just went to the trading room and bought that membership. So, yeah, so let's see the settings. Let's go this. We've got the slow stochastic. That's 18. We have a smoothing period of 10, but you know what? That's your prerogative. If you like a smaller smoothing period or a faster smoothing period because you like to see more jagged edges and it helps you to figure out what's going on better, then that's up to you. Trading is a very individual sport, as it were, but we can all start from that framework and then tweak things out just a little bit, especially if we have a lot of anxiety events related to trading. So that's the slow one. The fast one is the 6 and 15, right? This is the 6 and 15. right? And so again, smoothing period, totally up to you. You could have it 1 and it'd be really, really jagged, or you can have it 6 and have it be quite a bit smoother. So that's what you would use. The next key thing you'd want to have is just a really solid understanding of support and resistance, right? Learning to tell a story with a chart takes a lot of practice, and that's not something that you're going to just be able to pick up. It takes years and years to accomplish. But that certainly should be your goal. You should not be thinking of a chart in terms of high or low, lower, high, flat, whatever. You should be thinking about it in terms of the war between buyers and sellers and what's most likely. Hey, listen, if I'm this buyer and this happens to me, where am I most likely to go? And that answer is usually into relative support or to relative resistance. All right, and if you can frame it like that, you're going to make yourself some very, very good trading decisions. What is my email address? You can email me at, you can email me at, I'm going to write it down here, Anne-Marie at thetradingbook.com. There we go. I did spell that right? Yeah, absolutely. Okay. Sound moving in and out. That's dreadful. But guess what? He is recording it, and it's going to be much better when you see the recorded session. That actually is going to be much better. What types of pivots do I use? I use the person's pivots. Person's pivots. Never floor trader pivots, or is that the same thing? I do not know. You know what, Sandy? I will say this. I'm very specialized, so there's a lot that I don't know. I am not a generalist. I don't have a great deal of knowledge about the market, but I am a specialist. And last time I checked, it's specialists that actually made all the money. And you know, we can see that. The endocrinologist, the brain surgeon, the the top tier athlete. The market rewards the specialist, not the generalist, and many of us are really focused on learning more and more and more and more and more and more and more. And what we should be learning is at a deeper, less superficial level, and just really focus on more granular events. Now that's super boring, I will tell you. Learning at a granular level is very, very boring. I can tell you that all the practice I go through, I would rather lick pavement than absolutely grind through all my triggers all the time to make sure that I'm setting things up in the proper way. But if I didn't do that, I would not be successful every day. So I am very happy to go through that intense grind in order to get the results that I have. And I know, as you can tell, I am extremely enthusiastic about the market. I really, really do love it. And this one indicator, when I latched onto it, it really did change so much about how I saw the market. And the more I looked at the indicator and the more I compared pieces and looked at the relationships about what happened when prices hit some space and that sort of thing, it just became more and more and more powerful. It's like, I can't even tell you, it's got so many layers of strength, so much greater than the average indicator. And like the MACD, I was so happy to throw that thing to the curb. I just cannot even tell you. This stochastic is delightful. It is the only indicator that I use as an underlying, meaning that it sits underneath the charts. It's the only one. I don't have really anything else going. Now, I will look at some other things. I'll look at a linear regression channel. I'm always looking at moving averages. I look at a Bollinger Band once in a while, but hardcore, fast action decisions and good, strong decisions help me to make the right choices there every single time. The best thing for you to do is when you decide you're going to trade something, make sure the story the chart is telling is the same across time frames. Because if the daily chart is telling you a different story than the hourly chart, it means two sets of traders trading two sets of time frames have opposing ideas and they're going to duke it out, and that means you're going to stand in a choppy zone until one of them wins. And then everything starts moving in that same direction, and you know you're sitting in a great space. Very happy to hear that you learned something. That's super, and I appreciate that, Robert. I'm happy that I could help some of you, and you know, I appreciate those of you that are my members that are just taking the time to just come in here, and you're junkies like me. Yes, the Williams indicator is very nice, but see the turns on the SMI also. Look at this right here. See this turn right here? Here's where it occurs. I get advance notice all over the place. I must have confirmation of price action in order to take a trade. I just because it's coming there early does not mean I take it. That's what I mean. Because let's say you take this, right? It's coming right here. Let's say you take it. Somebody has a great commentary here. It says right there. Let's say you take that trade short. Oh, excuse me, you take it long because it's inflecting right here, right? Starts inflecting. So you take it. Where are you going to put the stop? Right? For me, I am staring at this going, okay, I'm definitely going to go fill that gap, and look at what it does. You have got to look to the left to see what it is that the right is going to do. Every single time. And if you don't have any left, meaning it's a new acceleration high or a new acceleration low, then you break out those Fibonacci tools. All right? But you can't do, I get lots of advance notice with the SMI all the time. Thank you very much, Mr. Hughes. I appreciate that greatly. The SMI is a momentum-based indicator, and all indicators that are strong should be based on price, because price is the best thing that you need to do. Not volume, not cycles, nothing like that is as solid, as consistent, and as reliable as the SMI. I'm telling you flat out, I have been trading for 8 years, 20 hours a day for the times that I sit in front of this space, and I know of what I speak. I promise you. I would challenge anyone to find an indicator that works better than this one, because I have not. Thank you, Zoran. I appreciate that. Where do I place my stops? At relative support or resistance. I do not use volume indicators. I do not use cycles. I don't do anything except what you are staring at right here. I got a couple moving averages sitting up there and my pivot points, and that's it. Is it okay to go with the default settings on the SMI? No. They're too noisy. Well, if you're looking at toss, it's 3 and 5. Let me show you what a 3 and 5 looks like. I'm not even going to smooth it. I'll just leave it like that. I can't read that. I want something to say, Anne-Marie, go short here. Anne-Marie, go long here. Anne-Marie, get out of your trade here. Anne-Marie, get out of your trade there. That's all I want it to do. I don't want it to tell me anything else. And when the SMI is like that, I'm like, I don't even know what that's telling me. That's too much information for me to sort through. My brain just cannot do it. I can't do it reliably. I will make too many mistakes because I am thinking about too much. You know what I mean? Oh, Sandy says on freestockcharts.com, I see the SMI ergodic. That's a beautiful. You don't want to use the EMA. You want to use the SMA. All right? You want to use the SMA? But that ergodic is beautiful. I like the ergodic. I really do. I just talked about this a little bit ago because I was on I was on at the Money Show earlier today, and we talked about these indicators and using an EMA versus an SMA. And the EMA, an exponential, gives weight to the candlesticks that are nearest, and not as much weight to the candlesticks that are behind it. The SMA gives everybody equal weight. I don't really care what's happening in the near term because I know most everybody uses the SMA, and I want to know what everybody else is thinking. That's what I want to use my technical indicators for. What everybody else is thinking. Because for the most part, the big money that tends to make money day after day, they're seeing the same things. They know that when they come into a moving average from above, they're going to bounce off of it. If they're coming into a moving average from below, they're going to reject it, and so on and so forth. No, it is not the same. The ergodic is not the same, but it can give you the same kinds of readings and the same relative information, right? Same relative information. All right. Well, Dave, are you there? Do I use the EMA? No, I do not. I don't like it. I don't like it at all. I don't think it gives me good indicators anywhere by and large. So I stick with the regular old SMA. Yes, I have used the system for long-term trades. Here's the greatest thing. Because the market is fractal, and what it means to be fractal is to have a copy of itself within itself. So anything I see on an hourly, I can see on a daily, I can see on a weekly, I can see on a monthly, and all the triggers look exactly the same. So yes. One line is okay, Sandy. You just want to look for that inflection and the rollover. Dave, do you have anything to add since you use this indicator so much?
I tell you what, I've been taking a lot of notes here. I love the way you're using it. I also like the ergodic oscillator, and I was just going to mention that it's not a standard part of Metastock, but we have the formula for it, and it can be imported into Metastock. So if you have Metastock and you'd like that, I'm happy to get it to you. And for those of you in the room who do not have Metastock, we would be very happy to give you a free trial of it. You can go ahead and email me on that, and I'm happy to set that up as well. One of the great benefits of Metastock is we can quite literally import just about any formula that has based on technical criteria that you'd like. It's one of our hallmarks.
Yep.
And we'll do that for you, and we'll import it right into your program. So be happy to set that up for anybody who'd like that, and certainly everybody who's not yet done the trial or is a member yet at thetradingbook.com. Please take her up on this offer. It's really a fantastic website. It's a fantastic resource. Obviously, I think what you've heard here today is that Anne-Marie knows her stuff, and she does a great job explaining it. She's a terrific educator. So I've taken away quite a few notes myself here, and I'm going to be putting those into my trading as well. So I really appreciate it too.
Well, that's great. Hey, thanks everybody for spending the time with me. I know it's in the evening. I know you've had a long day of trading and working and all of that sort of thing. And it takes a special, dedicated type of mind that says, you know what, I'm going to come and listen to this. I'm going to see if I can learn something. And, if you have that one takeaway is, listen, find some indicators that you like, that lie to you the least amount, and then work on gleaning as much information out of them as you possibly can to make your trading decisions more straightforward.